A very happy day to all of you and welcome to my YouTube channel. I'm your learning partner Sushila Hariharan. In this module, we're going to take a look at a category of bonds called as junk bonds. As the name suggests, junk literally means trash, something that has to be thrown into the garbage. But then, this is a financial instrument called as a bond. So let's take a look at what are junk bonds? Why do investors buy these junk bonds? The inputs in this video are especially useful for participants of MBA and CFA programs. When you buy or invest in a bond, the investor is lending money to the company. Okay? Suppose you are buying a bond of Tata Motors. That means you are lending money to Tata Motors. The issuer is the borrower. What do we mean by the issuer is a borrower? The company that has issued these bonds has borrowed this money. In effect, you are lending money to the company, the investor is lending money to the issuer. Therefore, what are the factors or what is the comfort level for a bond investor? The bond investor wants certainty of coupon payments, that is, certainty of interest payments. The bond investor wants a fair degree of comfort with respect to the knowledge that the bond will be redeemed on maturity. And these two are the primary factors for a bond investor. The bond investor, therefore, is considered to be an investor who wants assured returns as well as timely payments, and therefore comes under the category of a risk averse investor. Before we understand junk bonds, let's take a look at what is the ratings methodology or what are the ratings that are assigned by global rating agencies like Standard & Poor, Moody's, Fitch, etc. The first category of bonds ratings are investment grade bonds. Investment grade bonds are like the students in a class who always get distinction. Low risk. The bonds carry very low risk. Safe and secure. Why are they safe and secure? Because as the borrower or the issuer, the company has always announced very good financial results. The company's management is very strong and proactive. The company has positive cash flows. Their return ratios are healthy. And therefore, the bond is assigned a rating which falls under the investment grade category. This implies that the bonds which have an investment grade category rating will also give low return. Why do they give low return? Because the strength of their financials, the strength of their balance sheet, the continuity in their cash flows implies that the company will almost always make timely coupon payments and the investor has very little to fear or worry about the redemption amount. Global rating agency Standard & Poor has assigned these bonds in the following categories: AAA, AA plus, AA, AA minus, A plus, A minus, triple B plus, triple B, triple B minus. All these bonds, even though there are shades of differences in the credit quality of the issuers, they come under the broad category of investment grade bonds. As opposed to investment grade bonds, we have speculative grade bonds, popularly called as junk bonds in market lingo. Junk bonds are high risk in nature. The issuer has erratic cash flows. The financial performance of the company is not very strong. The ratios, the return ratios, the asset turnover ratios, etc., look very, very uncertain. The investor, therefore, before lending money to such a company, knows that there is a high risk assigned to this company and therefore will be expecting high returns. This implies that a company which has been issued a speculative grade rating by rating agencies have a high degree of risk associated with them. S&P, Standard & Poor, the rating agency, has given the following ratings for the broad category of junk bonds. Though in market lingo, junk bonds are only the triple C category, in market terminology, these bonds are extremely high risk. There is a high risk of financial performance, the balance sheet is not strong, the revenues are not certain, the cash flows are uneven. All this make the investment in the bond of an issuer which has a speculative grade rating extremely risky. Why do investors then invest in junk bonds? Because of this high returns. It's like asking, why does a gambler go to a casino? Why do you invest in a high risk product? You invest in a high risk product because you expect to get high returns. How can the company give high returns if it is speculative grade? Because the market expects that the company, which was perhaps on the brink of bankruptcy, is now turning around. They're expecting improved financial performance of the issuer. This improved financial performance of the issuer could result into a upgrade from speculative grade to investment grade by the rating agencies. Let's take a look at a company called Coinbase. Many of us who are cryptocurrency traders will be very familiar with the company called Coinbase because it's one of the largest cryptocurrency exchanges in the world. In September 2021, they issued a junk bond issue. Coinbase, which is a cryptocurrency exchange, was assigned a rating of Ba2 by Moody's, implying that the bond issuance is extremely risky and falls under the category of speculative grade. But though the bond issue size was $1.5 billion, almost a jumbo issue, the company received $7 billion by way of bids. Look at that, almost 4 times the amount. That was the kind of appetite for investing in a junk bond. Okay? And therefore, the junk bond market is amongst the most buoyant markets or buoyant segments where the spreads are very high, the bid offer spread is very wide, and yet there is a risk appetite that risk aggressive investors want while investing in bonds. Which gives higher yield? Do investment grade bonds give a higher yield, or do junk bonds give a higher yield? Investment grade bonds are safe and secure. Okay, think of the government of India or the federal government of the United States. Safe and secure. So obviously the coupon that is paid by them will be low. Junk bonds, on the other hand, are both unsafe and unsecure. Therefore, to compensate investors' expectations, the yield on junk bonds will always be higher than those of investment grade bonds. Thank you very much for watching this video. If you like the contents, please do subscribe to my channel. Your comments, your feedback, your views are extremely important to my content team and to me. That keeps us going. Bye for now.